everyone's portfolio is a reflection of like how much risk they can actually take on internally. So if you like can't sleep at night knowing that your money is in this risky of an investment, then it doesn't have to be in that risky of investment if it makes you sleep better at night.
Hello, everyone. Welcome back to Tolusnotes. On this podcast, we'll explore how young adults invest their time and their money. I also have a written newsletter filled with valuable information that you can subscribe to at tolusnotes.com. Though my guest today is relatively young, she's been investing for quite a while now. At 25, she's managed to amass an investment portfolio with a value north of $100,000. Just for context, the average net worth of her age group is around $50,000. We discuss how she started her investing journey, the role and debatable size of emergency funds, and many more. This episode is all about getting rich slowly. I hope you enjoy it. Towards the end, I also shared how I got into finance and software engineering. If you can, watch this on YouTube because we go over her portfolio allocation. Links and timestamps will be available on tolusnotes.com as always. Enjoy. All the material discussed on this podcast is for educational purposes only. It should not be taken as personalized investment, tax, or legal advice. It is not an indication to buy or sell certain securities. My guests and I do not guarantee the accuracy or completeness of this information. As always, do your own research. Adrienne, welcome to the show. How are you?
Thanks. Good. I'm good. How are you?
I'm doing quite well. Thanks for coming on the show. So I wanted to have a conversation with you because your channel is targeted towards young investors, and so is my newsletter that I send out. And when just browsing channels, I felt like your message was really relatable, and your channel was one of the few finance YouTube channels that wasn't going, Tesla is going to $1 million, buy this stock now, or this penny stock is doing this, buy this now. So I really wanted to just have a conversation with you about, your investing, your portfolio, your YouTube channel, and just all that stuff.
Yeah, awesome.
All right, let's get started. So we actually started on YouTube, so let's continue there. So how would you describe your channel? What makes it different from other channels?
I think, like, as you were saying, a lot of people, I think, are looking to get a lot of like the clickbait kind of videos out there talking about Tesla, talking about the penny stocks or how to get rich quick. And that's like never been my investment strategy. And it would be really hard for me to go on. It would be really easy for me to go online and to talk about like the Tesla or the penny stocks or things like that would get clicks. But I can't do that. I can't do that. I wouldn't be okay with my conscience. But yeah, I think I got to a point with in terms of like thinking about my channel was just the lack of financial literacy and knowledge in like young 20-year-olds, like coming out of college or going into their first job, and actually how to realistically, practically invest their money in a realistic way. Because yeah, I just don't, not that I don't agree with like Tesla or penny stocks, it's just not how I've been taught to invest. So I guess that's kind of the whole idea of my channel, and hopefully that's how it's reflected in my videos.
Awesome. Yeah, no, definitely. When did you start the channel?
I think I fully committed to it in April, but I had been thinking about doing a channel so April 2020, but I've been probably thinking about doing this for like 2 years. And then when everything happened with the pandemic, I was like, this is the time I have to do it.
Awesome. So that's nice. How did you start investing?
Yeah, so I started right when I graduated high school. So I'm half Asian. So in Asian culture, it's very common for like older family members to give money to like younger family members when they have like family or big life events like graduating high school. So I got a little bit of money when I graduated high school, and I think unlike most like 18-year-olds, I invested all of the money that I got, probably just from like learning from my actually definitely learning from my parents. I feel like a lot of times in parents, they don't talk about money. They don't talk about finances. And like, that was the complete opposite for my family, at least in my parents. They were always very open about what was going on in their finances, like things that were going on in the world. Like, I vividly remember 2008 happening, and the stock or the housing market crash, and them being open with me helped me understand like how investing works and that it's not a bad thing. So that's how I first got and started investing, and then it's kind of just grown ever since.
Awesome. So I did a little research and I was watching one of your videos, and you mentioned that um, you kind of took part in this Dave Ramsey course through your church. And
Yeah.
the only reason I bring that up, and that's kind of struck me, is that I recorded another episode with another YouTuber who said the exact same thing. So is this common? Is it common for churches to kind of offer Dave Ramsey courses on finance?
Yeah. So I was going to a church when I was in college, and I was actually dating someone who had taken the class, and he really wanted me to take it with him. And so that's how I first heard about it. Um, and I learned a lot in that class. I don't agree with everything that Dave Ramsey says, just like I'm sure no one agrees with everything I say. But that was like what piqued my interest. So maybe it is kind of common. It's definitely very basic. And so I think that's a good starting point for a lot of people.
Definitely, definitely. So how did you pivot? Because if I'm correct here, Dave Ramsey kind of preaches, I guess, no debt. I'm not even sure if he preaches investing. I think it's usually just debt, repayment and getting out of debt. So how did you pivot to a pretty aggressive stock portfolio that we're also going to get into?
Yeah, I think that was one of the things that I didn't like completely agree with Dave Ramsey about. I mean, even when I was taking the class, I had a credit card, and I never saw it as a bad thing. I'm pretty sure because I saw my parents have credit cards, and it wasn't like, I feel like some people think they have a credit card and everything they purchase, they then have to pay interest on. Like, it's just not, credit cards aren't well like communicated, like how they work, I feel like in,
Yeah.
I don't know, society. So I think I had an idea of how credit cards worked, which is why I wasn't scared of them. I always paid mine off. Actually, even after I took that class, I had one credit card, and I like barely used it. And then honestly, it probably wasn't until like, I don't know, maybe a couple years ago, was it last year? Yeah, it was last year. I got a Chase Sapphire Reserve. And then after that, I was like hooked, because I fell into the whole like credit card points thing. And I found out it was like not that bad of a thing, because you can get a lot of points and use them for other things. Anyways, in terms of investing and Dave Ramsey's style, he briefly talks about investing, and it's a very basic approach. I think he talks about investing into 4 different categories, and he really only talks about mutual funds, not even ETFs or index funds. And so I think that was a good like basic knowledge, but I think for me and how old I am, I'm able to be a little bit more aggressive with my investments. And so I would be more aggressive than what Dave Ramsey would teach. I'm also just very interested, and I love reading about it.
Yeah.
And so I'm like, well, if I'm going to like read about it and be interested, like that's how my money is reflected.
Awesome, awesome. So I'm going to share my screen here to this
Okay.
chart from one of your videos. Um, okay, so this video where you revealed was this the first time revealing your portfolio?
Yeah. Mm-hmm.
Oh, okay, awesome. So this kind of struck me because you have, what is this, 5% or 4.5% cash
Mm-hmm.
relative to the rest of your portfolio, and you have 95% of it invested. So a lot of people would see this, and a lot of people would say, like, you're crazy, or they'll come up with some reason on why this is really risky and why it shouldn't be done. So what's your risk tolerance, and why would you allocate your money this way?
Yeah, that's a really good question. And that's something I actually just talked to somebody about that recently. Um, for me, and how much, I feel like everyone always talks about like, how much should you have saved for an emergency fund, quote unquote. Um, And it's so dependent on what your lifestyle and what your situation is. Like, if you have a house and a car that's probably breaking down like every other week or something, then your emergency fund should probably be a little bit bigger than someone who like lives in an apartment where those things are being taken care of, or who doesn't have a car. And so for that reason, I've up until recently have been able to keep my emergency fund like pretty small, just because the bad things that could go on in my life, they're very small. Like, it's pretty much just my car, and if something happens with my house, and that's covered, or not my house, but my apartment, that's covered because I don't own it. And also for me, something else that I actually don't think people talk about is that how often emergencies actually happen, at least depending on someone's life, isn't really that often. And so it may, for me at least, it's more advantageous for me to have that money invested and growing for a certain amount of time. And then if I need to take it out, then I can take it out of the market. But the growth that I make can a lot of times outweigh not having it invested. I hope that makes sense.
Yeah. So
Yeah.
I've you'd bring that up to a lot of people, but it almost seems like when you need the emergency funds, that's when the market is at the low lows. So you'd kind of be forced to sell at those lower prices.
Yeah. That's why some of my investments there are in not as polar of investments, just in case that does happen. Like, I have a good chunk of my money is in like money market funds. So.
Gotcha. Yeah. Let's dive into that. So explain first. I see a lot of index funds here, which is good. I see you have the total market. And then also is this 11% cash just sitting in your balance?
That's cash. That also includes a lot of the money market funds that I have. So.
Gotcha. So that savings rate is not as aggressive as it looks.
No. Correct.
Gotcha. Awesome. So I think something I looked at this, and something else that stood out was this 13% allocation to Exxon. Now, if you tell any 25-year-old or young adult to invest in a oil company, I think they would just laugh at you, and they would rather put their money in Apple, Tesla, or anything else that they're familiar with. So what do you know that we don't know?
I saw that question when you were emailing me. I don't think it's something that I don't know. My background, so I studied in college, I studied chemical engineering. And I always say invest in what you know and what you feel confident in. And so like a lot of people commented on this and was like, you need to be in Tesla. Like, what are you doing in oil? And I honestly, like, I see Exxon and Tesla as like apples and oranges. Like, in my head, I cannot compare them because like one's a growth stock and one's a value stock. And just because of like my background in engineering, like I understand more of the process behind like the oil and the not natural resources, but the
Natural
renewable
gas.
energy. Yeah, that the renewable energy, I kind of understand that on a different level than I think other people may. And so what I tell other people to invest that much in Exxon, probably not, especially saying or thinking that someone, like, everyone's portfolio is a reflection of like how much risk they can actually take on internally. So if you like can't sleep at night knowing that your money is risked or is in this risky of an investment, then it doesn't have to be in that risky of investment if it makes you sleep better at night. And that's not a bad thing, but I think sometimes our society kind of looks down on that. So, I mean, it just depends. It's so different for everybody. But
Gotcha.
yeah, I'm not super worried about it, but like I could sell it. I have thought about selling it. I'm not super worried about it.
Gotcha. Yeah. Would you say you're a value investor or?
I would say the majority of my portfolio reflects the value investing, but I do have a few growth stocks in there, things I'm just
Gotcha.
passionate about.
Gotcha. Awesome. So let's move on a bit. What would you say about the FIRE movement? Would you say you're sort of investing now aggressively in order to retire early?
Yeah, that's a good question. I wouldn't say my goal is to retire early. I would say I'm very passionate about like what I'm doing, and I could never see myself just not doing anything at all, like just retiring. And I don't think people who are like retired actually from the FIRE movement that they don't do anything. Um, I'm just always like I'm doing something like in every aspect of my life. I feel like I'm using my time to do something. But I feel like I'm more investing for like the freedom of like, if I don't have to work, then I don't need to work. Not being reliant on an employer for my income, just kind of the freedom from that. I would say that's my priority.
Awesome. Awesome. That's that. I think that's what I've been hearing a lot of is that people don't necessarily hate their jobs. They just want the option to,
Mm-hmm.
if you wake up and don't really feel like going to work, you have that option.
Yeah, exactly.
So, yeah. Awesome. So, um, I think I watched one of your YouTube intros on. Actually, before we go back to YouTube, let's spend some more time on the on your portfolio. Well, what other asset classes are you invested in? Do you have any crypto startups or anything else?
Nope.
So you're
I
just
have
all
one
in the stock
more,
market.
but I haven't talked about it yet on my YouTube channel, so I'm not going to talk about it here.
Okay, we can. Okay, we can keep that for the. I'll be looking out for that one.
Yeah.
So you mentioned risk, right? And you said you're kind of a value investor, but like if there's a growth company you put some money towards it. And by definition, value plays are riskier than growth, since they typically have like more debt and they may be like failing companies that you're betting on to rebound and so on. So how do you position yourself for market crashes?
Hmm. For me, I personally see corrections in the stock market. I always call them sales because it's when other people don't want to buy, but then I can tend to get stocks on sale, quote unquote. Um, but there is the risk of a company not coming back up. A lot of times, if it's like a very established corporation, the likelihood of it actually crashing is very small.
And let's talk about risk profile a little bit. When do you feel like you start selling? Is it at a negative 40%, 50, 80, or do you just think you
Hmm.
just leave it there because you're investing for the long run?
I haven't gotten to that point, so hopefully I never will. Um, I don't know. That's a good point. I may actually like have wait because I personally think you shouldn't have any more than 10% invested in any one stock. That even if a company were to drop to zero, your entire portfolio isn't going to be negatively affected. Um,
Okay, that makes
so
sense.
yeah.
That makes sense. Um, what role does fixed income play in your portfolio? So bonds, I don't know, REITs, anything that just pays you on a regular basis.
There's a few uh, uh, index funds or ETFs. I'm not quite sure. They all pay out a pretty good dividend. I don't take any of my dividends out. In college, I did. That's correction. In college, I did because I didn't work as much as I obviously do now. Um, but yeah, pretty much all of the money that I get from dividends, I reinvest either back into the stock that I got it from or into something else. I usually just let it collect. That's another thing. Usually I let that money collect from dividends. And when there is a correction, I'll go and invest that money.
Oh, smart. That's really smart. Okay, thanks for answering those. Let's go back to YouTube for a bit. Um, so I think I saw your intro video and you mentioned how you're one of your motivations for creating the channel was because there were not that many female YouTubers talking about finance. So why do you think that is?
Yeah, I mean in the finance industry, not just on YouTube, but in the finance industry, there's always been just a lack of females in finance. Um, I think it's kind of similar to how there aren't a lot of females in engineering, just because of like the technical aspect to it, but also I think the kind of the where it takes on like a female or a male. And I think males are more up to the challenge, if anything. But I think there's a different aspect that women can bring to investing. Like, for example, I think my take on risk is completely different than what a man would say, because women just, I've read a few articles about women in investing and they tend to be less risky, but they tend to stay in the market for more of the long term. And so, yeah, there just hasn't been, I follow like all of the financial YouTubers and there aren't that many women. And I know that there are women. I obviously can't be the only one. So yeah, I don't know. I just kind of wanted to be like a voice to that.
I definitely agree with that. I'm a software engineer by trade also,
Oh,
and just
cool.
going through college, and even in the professional life, there's hardly any women in the field. So now, big ups. I really commend you for
Yeah.
taking a stand and making a statement.
Thanks.
Awesome, awesome. So, in your opinion, so what are some must-read books that you feel like every YouTuber or every I said YouTuber, sorry, investor or young adult must read for if they want to start investing or get into personal finance?
Yeah. Um, I'm not a huge book reader. I read a lot of articles, but obviously I have read Rich Dad, Poor Dad. That kind of changed my whole mindset of like how I make money, how I manage money. There is a book that I actually really want to read. I forgot what it's called. I need to look it up. But it's basically about the emotions and the psychology behind investing, like the psychology of how people make decisions for their money. Because I think a lot, it's called, sorry, I just got it, The Most Important Thing by Howard Marks. Someone recommended it to me. Basically, it's about like how a lot of times people make very emotional decisions about their money. Whereas if people tend to just rely on their logic, usually they can stay out of trouble. But yeah, I haven't read it, but I heard it's really good.
Yeah, I haven't read it either, but I definitely recommend anything by Howard Marks.
Mm-hmm.
His book Mastering the Market Cycle is, for me, my favorite investing book. That just
Oh,
kind of talks
cool.
about how the market is cyclical, and whenever there's extreme exuberance, there's always like a drop, and then you kind of go back to it. So I think
Mm-hmm.
that is what most new investors need to understand, because a lot of people, when they're in the midst of the pain, they just think that pain continues forever, and whenever there's good times, they think good times
Mm-hmm.
continue forever. So
Yeah.
yeah, so that's actually funny because I've had this conversation with quite a few people now. What role do you feel like psychology books play when it comes to, or psychology plays when it comes to investing?
I think if you were to get into the people who are more informed of the stock market or who feel more comfortable or more knowledgeable about the cyclicalness of the market, I think those people probably more heavily rely on the facts and the financial knowledge. Whereas I think like the everyday person, um, they're definitely all psychology and the whole, I think they rely on the psychological aspect to it, which can often get you into trouble. Especially, I know personally, like I've seen family members who have like taken their money out when the market was dropped, like in 2008, because they were scared it was going to continue to go down, even though if they had ridden the whole way through, they would be back at the top. Um, So yeah, and those are people who aren't as knowledgeable about the market and how it works. Um, so yeah, I think it's a lack of knowledge, probably.
Definitely, definitely. Thanks for that. So, what would you say what are your words? What makes a successful investment?
Hmm, that's a good question. I think if you have done your research and you know what exactly your money is going towards, whether that be in an individual stock or an index fund or an ETF or a mutual fund, I would say that's the start of what could be a great investment. That doesn't mean necessarily it's going to be a good investment. But if you know generally like who's managing the fund or what a company's business model is, and you understand that industry, you, and that even after doing all of that research, you still feel comfortable like putting your money into that kind of business, then I think that, yeah, that's like the best foundation you could have. But in terms of after that, I would say, especially at least for index funds, like I've never been someone to like day trade. Um, so investing for the long term is the way I invest. And I would say, unless you're investing in growth stocks, like individual stocks that are growth stocks, and if they go up and if you decide to sell when they're higher than what you bought it at, then I would say that's a successful investment also.
Gotcha, gotcha. Awesome. So, wrapping up here, what other investors would you like to see on this show? Or
Hmm.
YouTubers, finance YouTubers, or
I'd love to see more women. There aren't many of them. I can think of maybe a couple. Um, One's called, her name's Kelly Ann Smith. She's Freedom in a Budget. She's talked about, she's more budgeting related, and she's talked about how her investing videos don't do as well on her channel. I think because her channel is so based on budgeting. So she's a bigger YouTuber. Her name's Investing with Rose,
with Rose?
and she has a lot. I don't know if you've heard of her, but
Oh
I like
yeah,
a
I
lot of her
have.
videos too.
She
Okay.
has about 200K subscribers.
Yeah.
Yeah, so that's a really big channel.
Yeah.
Awesome. Do you have any questions for me here before we end?
I'm curious about your engineering background and how you got interested into investing
Yeah,
in
definitely.
that.
So we can start with engineering. So I'm Nigerian. I moved here when I was, I think, around the seventh grade. And back home, I used to just mess with computers a lot. But when I came to the United States, I think the internet was more freely available because back home, you'd have to go to a cafe to be able to use the internet, and it's kind of like a timeshare, so you have to pay for your time. Or coming over here, there was like dial-up, AOL, and all that stuff, and I would just kind of play kind of computer games all day online. And then my older brother got into PC gaming. I kind of have some controllers up there, and so from the PC gaming stuff, I was in middle school, and this was totally illegal, but I got into the community that would make those games free for anyone to pirate online. I didn't necessarily pirate them. I wasn't good at pirating or anything, but I would get the pirated versions and I would modify them to be able to fit on a USB stick. So whenever I went to school, I would just plug in like a USB stick. I'd be able to play Halo, do everything, close the game, take out the stick, and I would leave almost no traces on the computer because all the save files, all the information, all the documents just got, backed up to the USBs. So I got a pretty good online following of the people that just kind of wanted this USB because they just brought their USBs, they downloaded my files onto it, and they just plugged it into any computer. They would be able to do all their stuff, unplug it, and just leave without a trace. So that's how I kind of got into computers, and then applying into college. I didn't know that so I was already programming back then because a lot of games were coming out really fast. So I ended up learning programming to automate making it. I was just addicted. I wasn't even playing the games. I was just addicted to like getting these things out into my to my followers online. Um, and then that's how I learned programming and just using YouTube. And then when I applied to college, I applied as an electrical engineering because I didn't really know you could code as a living. I honestly didn't know. And then when I found out, that was probably the best decision I've ever made because it kind of came naturally to me. And college it wasn't necessarily easy, but it wasn't hard either, simply because this was something I've been doing for years now, and I just sort of understood it up until that point. So that was my engineering background. For investing, I think in college I had a friend, I think my second year of college, who just had his TD Ameritrade sort of Thinkorswim portal opened. And like you, he was heavy into oil. Also Exxon actually back then, but that was back then. I hope he did well, but so he kind of showed me how to open an account. I opened an account. I took all my savings. I don't know, maybe I had $2,000, $3,000 or something like that. And I didn't know anything about oil, obviously, but I knew Netflix. So I threw everything into Netflix, which would have been great. But then I called my dad. I was like, hey, dad, I started investing. I threw all my savings into Netflix. He was like, what are you doing? You can't put everything. You have to sell out of everything now. And it was just, he explained to me the need, kind of like the need for having some savings and all those things. So I was like, I thought about it for a bit. So I sold half of what I put into Netflix. And this was back in this was back in 2013, 2014. And I put half of that, so maybe $500 I took back into my account. And the remaining 500, I probably lost just playing with penny stocks. And then that's kind of like how it all started. I mean, Netflix did extremely, I honestly did not know what I was doing at that point, and just invest in what you know in. And in college, everyone talked about Netflix, right? So that's why I just put everything in, no diversification, none of all that stuff. And that's where I got started. And then just going on, I just found that I was really interested in it. By the time I graduated with my software engineering degree, I wanted to kind of get a blend of both. So sorry, my cat is, so I wanted to get a blend of both. So I only applied, I applied everywhere, but I focused really on on finance companies. I ended up working at NerdWallet, which is the personal finance
Yeah,
startup.
that's so cool.
Yeah, so that's where I kind of got into finance even more. But what I figured out is that, I think the advice is designed for the masses, and they kind of give advice that works for everyone.
Yeah, I really like NerdWallet.
Yeah. And from that, I just kind of figured, not everyone has the same risk tolerance. Not everyone has the same sort of goals. And since then, I've just kind of done my own thing in that I wanted to explain, the other side of sort of like the less talked about things in investing. Sort of, young individuals, for example, I believe they don't need fixed income because you can look at your years as your human capital, the number of years you have left to work as a bond. That's literally a bond because it pays you monthly, pays you a monthly salary. So if you take that perspective on things, you can see that for a young individual, 100% equity portfolio is actually not, it's riskier, but in the long term, if you look at it that way, it's actually not as risky as you think. Because if you lose 100%, I mean, you don't need to sell because you're not retiring yet, but if you lose 100%, you're losing 100% of a really small value of your portfolio because you're just starting out. And even if that happens, you still have your bond that's paying you out, which is your salary, if you look at it like that. So that was like what the first newsletter I sent out was, just explaining that. And people just loved it. People were just crazy about the idea. And a lot of people messaged me to discuss it. And that's kind of like how it all started. This was back in February. And that's just kind of how it started. And it just kind of continued growing and growing to the point where, the subscriber base is probably from anyone who's in debt, trying to get out of debt, to multimillionaires that just kind of follow it. And it's been really nice just getting to know them, having a lot of conversation with people. and they're really committed in that, they email me and we have conversations, and it's been great so far.
That's awesome. Yeah, I love the community. Every time like I get a message, like usually people are so kind, and I feel like, yeah, the community is just very, because I honestly don't have like any friends in real life that are as interested in this as I am. And so
Oh.
like having like a community online is really nice and helpful.
I definitely agree. I think that's one of the biggest reasons I wanted to do the podcast also, is that the people who are subscribed, I don't know all my subscribers on the newsletter, but I can tell that a lot of them are just in California, because that's where I am. And that's where I think their friends are from also. But from just recording the podcast, I've been able to branch out to many people I would have never, messaged about finance. And it's always nice when people actually respond back. I think the people that actually have a long-term view and are interested in investing reply.
I was talking to my dad the other day, and he was like, I just don't understand why a lot of young people, like in terms of like day traders, he was like, I just don't understand why you could think like a corporation who's very established could be like valued at one point today, and then tomorrow it's like twice that. It just doesn't logically make sense. So yeah, I completely agree with you. And that's really cool, because I do agree with like a lot of like younger people. They really want to get like rich quick. And that's not what my channel's about at all. Like it's all about getting slowly, which is consistent and in my opinion, the best way to do it. Because I also think about it is like, if you are handed like too much money, like too quickly, and you don't know how to manage it, then if you were to get $1,000 and you don't know how to manage $1,000, if you get $1 million, you're not going to know how to manage $1 million. And so like, you really need to know, like I didn't get to $100,000 overnight. Like it took like little by little, saving more and more. And that's how you become a knowledgeable investor, I think.
I definitely agree. Well, thanks, Adrienne, for coming on the show.
Yeah, no problem.
Hello, hope you enjoyed that episode. You can support the show by subscribing wherever you get your podcasts and leaving a review. We're also on YouTube if you'd like to watch us smile and laugh as you listen. Also subscribe to my premium newsletter at tolusnotes.com. That's TOLUSNOTES.com for timeless lessons for young investors. See you next week.